Hello everyone, today we are going to learn about top 5 accounting terms. So before learn all other accounting terms, we are going to start with business transaction. Why? Because this business transaction gives the rise whole accounting process. So what does accounting transaction or business transaction mean? Business transaction, it is the exchange value of goods and services but in monetary terms. For example, goods sold worth rupees 10,000. This is a transaction which is expressed in the monetary terms. Why I am keep insisting about monetary terms? Because the transaction which cannot be expressed in monetary terms cannot be recorded in accounting. This is because of the concept of, we call it money management concept. So the account transaction which cannot be translated into monetary terms cannot be recorded. However, in further ado, the business transactions are of two types. First one, we call it external transaction. What is external transaction? External transactions are those transactions in which the two parties are involved. One is entity itself and then the third party. And this transaction gives rise to the profit. However, in contrast to this transaction, we have another transaction, we call it internal transaction. What does internal transaction mean? Internal transaction means are those transactions which occurs within the entity and does not give rise to profits. For example, depreciation. First, depreciation charged on fixed assets. And take another example, provisions. So these are the examples of the internal transactions which does not give rise to profit. These transactions are also expressed in monetary terms. We have to take a care consideration when we talk about business transactions. Those transactions only will be recorded when they are translated into the monetary terms. So let's get into new accounting term. Now we are going to learn second and third term. Second is debit and third one is credit. These two terms are little bit confusing. Actually, the meaning of these two terms are not fixed. Or in other words, these two terms doesn't have the definition of its own. Rather than these are the conventional styles of representing the accounts. Let me explain these two terms with the help of example. Take the example of an asset account. For example, machinery. If a business entity purchases the machinery, that means there will be an increase in machinery. So that increase will be recorded in the debit side of that particular asset account. Now, if we were to talk about the capital account, in that case, in the case of capital account, when a business owner invests in the business, so when it invests in the business, there will be increase in capital and that increase in the capital will be recorded in credit side. For example, cash of rupees 10,000. Take another example of expenses. Now, for example, business entity has done the expenses of stationery. So there will be increase of expenses. That increase will be recorded in the debit side. For example, stationery of rupees 100. So that's it. All the examples I have tried to explain here of debit and credit. So let's move to another term. My dear students, now we are going to learn about fourth term, and that is assets. Assets are the economic resources of a business entity which can be translated into monetary terms. However, there is a classification of assets which we are also going to talk about, and number one among them is fixed asset. Fixed assets are those assets which are held by a business entity for a period of longer than one accounting year. So in that category, we consider the examples like machinery, like building, like land. These are the suitable examples of the fixed assets. Now we are going to talk about another type. We call it current asset. Current assets are those assets which are held by a business entity for a period of less than one accounting year. And the examples of the current assets are BR, bills receivables, debtors, cash. So these are the examples of the current assets. Now we are going to learn the fifth and the last one, liability. Liability is the debt or the obligation of an business enterprise. Debt or obligation. So liability is the debt or obligation of a business enterprise which an entity have to pay. There are types of liabilities. Number one among them is long-term liability. Long-term liabilities are those liabilities which an entity have to pay in a period of more than one accounting year. For example, loans. For example, debentures. So these are the examples of the long-term liability. Now we'll talk about another type that's called short-term. So short-term liabilities are those liabilities which a business enterprise have to pay within a one accounting year. And the examples of the short-term liabilities are bank overdraft, bills payable, creditors. So these are the examples of the short-term liabilities. Hope you guys like this video. Please comment, share and subscribe.